The war in Ukraine has changed the world. And now we need to think about where this world is moving to, together. That's why MIM Business School is launching the nationwide educational project Reinforce UA, where the world's greatest minds will share their ideas and insights. And you will get their experience, change your perspective, and discover what changes should the business be ready for, before and after the victory. Every week on reinforceua.com.
Good evening, esteemed colleagues in Ukraine, abroad. We continue our project, Reinforce UA, and today we have a special session. I will not speak English, and our guests from abroad will hear the translation. For that, you need to push the interpretation button. Today, we'll be talking about the economy and war, and our guest is a famous Ukrainian economist, my colleague, the professor of MIM Kyiv Business School, Mykhailo Kukhar. Before I introduce him, he's here. Hello, Mykhailo, hello. Before I give the floor to Mykhailo, I would like to remind you that Reinforce UA project is initiated by MIM Kyiv Business School and is supported by the organization 50 Thinkers and the Bogdan Gavrilishin Family Foundation, as well as by three largest business education associations. I would like also to remind you that all the money that are contributed by you, also esteemed guests will be directed to support the women of Ukraine who were forced to leave Ukraine, but who want and who are willing to and can start their own business. This seminar will be recorded, and the recording will be available at this website, also on other platforms. And I hope that those who will not be able to listen it online will be able to watch it later. And today we'll have a very brief some presentation, and you will have an opportunity to ask questions today. For that, please use the function Q&A, but not the chat function. And I believe there's no sense to and no need to introduce you to Ukrainians, but for our foreign guests, I would like to say that Mykhailo Kukhar is the founder of Ukrainian Economic Outlook. That is the organization that regularly publishes information, provides consultations, and makes Ukrainian life, economic life, live. And Mykhailo is a very lively person, and I hope that those who joined us today will not be sorry. In Ukraine, not just in Ukraine, there's a holiday. I know there are different opinions on that holiday, but that holiday was started and is rooted into economics. And that is the economics that was developing and that needed women as an economic force. And I read that the full use of the economic potential of women can add to the global economy $1.3 trillion. And so all those who are perceiving this holiday via economic prism, and those who perceive it as the beginning of spring, I want to congratulate you with that. And those who believe that that is just an usual day, let's devote it to our lecture. Mykhailo, the floor is yours. Thank you, Vyacheslav. I am absolutely glad to welcome all the students and the alumni of MIM community and our guest today. This is a big honor for me to speak to you today. It's a pity that you spent this evening with me, but not with your beloved ones. But I am sure that you will be able to congratulate them after the lecture. I thank all those who joined us. And to talk about economy of war is not something festive, not something joyful, but some people like me, some don't like me. Those who don't like me, they say that I'm the most optimistic economist of Ukraine. I would like to get rid of this characteristic because I consider myself to be moderately pessimistic. But because of the heroism of our nation, because of the heroism of our armed forces, we're getting closer to the victory. And after the victory, we will be thinking only about the economic future of Ukraine. And I will talk about that in my final part of the presentation. I was asked not to show you too many figures, but I cannot but do that. I always have some 100 slides to support my thesis, my idea. So let's start from the main thing. The Ukrainian economy. Can you see here? We have the contemporary economic history of Ukraine. That's 31 years of independence. To up to the crisis here, 2 years of war, 14-15, the peaceful agreement, again, renewal, then quite a successful year 2021, $20 billion is the GDP of that year, and that's the result of the first year of war. Now the GDP of Ukraine, you know that the real GDP fell by 30%. The graph shows nominal GDP in US dollars. And this figure needs to be explained. Some believe that we fell almost twice, but some believe that we didn't fall that low. And I would like to show you, as I believe, the best illustration of the dynamics of the wartime economy, and also the assessment of the losses for the first year of the year. This is the Ukrainian export and its structure, the last pre-war year 21, the first war year 22, and the forecast for 2023. First of all, what is the drop of Ukrainian GDP from 200 to 100 billion? And you see March, when the war started, you see how export dropped. We lost all our marine ways. And you see that the blue is agricultural, red is metallurgy, which was very powerful. We lost 70% of our metallurgical sector, and other items start going up. You see the peak of the crisis, the lowest bottom of the fall of Ukrainian economy. We have the front line of 1,500 kilometers, and we passed it in April last year. And since then, we have very, very gradual renewal. The decrease of export by 35% seems to be awful for any country, but I especially show this comparison with the previous year. We Ukrainians, we like to complain, and we do not talk much about our achievements or victories, but last year our export grew up by 40%. And if we look at the level where we are, and that is 22-23 years, that's the level of our export revenues in the beginning of the pre-war 2021 year. 2021 was fantastically successful for economy, and we received the growth which during the first year of war. During that time, we lost our level of revenues within 1 year. It's difficult to understand it now. I say that, but I'm sure that I would see many skeptical faces if I saw your faces now. I will show you one of my favorite slides. That's a diagram which shows the structure. I will explain it a little bit. Here's our last pre-war year. That's the structure of GDP and the budget inside the GDP. You see, that's our GDP, $200 billion. The budget is 37%, 3% is the budget deficit, and the share of the state is basically 40% of the economy. But private sector is $132 billion, or 60% of the pre-war GDP. And you see how awful transformation is happening in the structure of economy of the country that's waging the war. GDP goes down less than it was expected. It decreases by 21% to 158. But look at what happens with the budget. The budget in total accounts for 2/3 of the economy. And the budget deficit is almost equal to the budget. So once we're talking about the private sector, which is in blue, the private sector goes down from 132 to 53 billion of revenues. It drops more than twice. Those who listen to me with some skepticism, and they say, well, but we feel it just in our company that the market is twice smaller, and because of the temporary occupied territories and relocation of almost 800 enterprises, and that's the Ministry of Economy that is doing it. They were relocating it from the northern part of Ukraine to and the southern part of Ukraine to several western regions of Ukraine. And that is the forecast for the second year of war, for the year 2023. According to the loan budget, our budget will account for half of the economy. And the private sector, as we see, will be recovering much faster, even though no one will say that where the proportion where more than 55% of the economy is the share of the state, it's impossible to get it in taxes. This gray zone is the share of the foreign financing, thanks to which we didn't have default in Ukraine. Our banking system didn't fall, our budgetary system didn't fall, and there was no crisis of budget payments. You know that the financial assistance was provided immediately by the West, and Ukraine requires approximately $37-40 billion just to cover the budgetary hole which we have. In order to illustrate this picture better, I will show you in more common terms. And well, we can show it this way. That was the structure of our economy. 1/3 and 1/3 public sector and private sector. And the second year, we see gradually that they gradually are getting almost 50-50. Now talking about the GDP indicators, that's the nominal GDP in dollars. We don't know whether it's 155, 158 billion this year. Here is this sharp growth from 150 to 200 billion in 2021. That's our wartime decrease. And you see the lowest part last year, and since then the very gradual recovering. And we expect that the GDP in dollar equivalent will grow by minimum 11% this year. Talking about the real GDP indicator, that is the sum of sold commodities and services weighted by inflation of this year. And you remember last year we finished at plus 3.5%. That was the growth of our GDP quarter by quarter. This year we achieved the lowest indicator. And next year, because of the low base, starting from the second quarter, we'll have almost two-digit figure of growth, even though we don't expect more than 3% of the real GDP growth within the year. This will be just 70% of the level of our pre-war GDP, because our decrease of the real GDP is 30%, and we don't expect anything good from the point of view of inflation. That's customer price index, producer price index, and the average deflator, GDP deflator. This year, last year, basically, because the CPI went up in the market, the wholesale prices went up by 60%. That's last year, and this year we expect that they will be decreasing, and the prices for the products of Ukrainian export will go down this year, which means for us that the retail inflation, which by the end of the year was 26.6%, will go down till the end of this year up to 12%. Though, dear colleagues, the average inflation, if you look at how you increased or decreased your revenues, because many say that in hryvnias it hasn't changed. And what about the competitors? What about the market in general? In general, the prices in the economy went up by 37 and almost 0.5% last year. And I don't see any reasons why they wouldn't grow up 21.6% in 2023. The key factor that confirms the thesis that we lost 1 year in our development, and we will not need 10 years to get back to our pre-war level of life. There's one more indicator which you know well, and that's the average salary in the economy. We and the government, we cannot still correctly calculate the number of unemployed, number of forced unemployed people, and also the internally displaced persons. Now the figure which is quoted is more than 5 million. Last year, we finished with the average salary, which was more than $500. Even with in December, it was $615, and in Kiev was $900 an average salary with the bonuses in the end of the year. During the first year of the war, the salaries were adjusted by 20%, and we see the December of last year 410. But looking at the dynamics, you could feel in the market that you have to every month or every quarter to increase salaries to people. And the average trend shows that next year, the growth of nominal salaries in hryvnias will be minimum 24%. And this will be exactly the pre-war level of Ukraine, depending on what would be the exchange scenario, whether there will be some devaluation up to 42, 41, 42 hryvnias per dollar. In dollars, the salaries will go up by 24 or 10% compared to the beginning of the year. One of the key questions is the issues is the issue of exchange rate. The exchange rate depends on the balance of payments. So let's look at our foreign trade. And I believe we can put this presentation, we don't do it always like that, but this time I will give this presentation to you because it has much more data. I always take more figures. Those who know me, I always have 50, 100 slides more than needed because I am looking forward to getting your questions, and I want to be ready to answer your questions. So you'll get a big data set after the presentation. Our ports, we don't have many of them left, and only grain agreement allows us to support the agricultural export. The blue area is at the level where it is. Unfortunately, more than export, we have the resumption of import. That's not very good for macroeconomy, but as you understand, it's quite natural. These are 2 months from the beginning of the year. And now you see the import went up to the third, the fourth quarter of the last pre-war year. And we forecast that it will go up further. In macro figures, this is not very good because I would like to show you this data. That is the year 2023. I will show you year 22. Okay. Let's look at this year because you are here to hear the forecast. The situation with the balance of trade is minus $25 billion, and the balance of trade, the difference between export and import this year, will go down to minus $32 billion. Also, there is one more factor of outflow. Previously, we had people who worked abroad and would send to the country $14 billion. Everyone expected that this figure will go down from the beginning of the year. It basically was resumed by the end of 2022. But in 2021 and 2022, Ukraine gets 14 billion from labor migrants, even though now we have 5 million persons more of such migrants. We have the situation when we call it the labor migrants, vice versa. My wife, my children, like many of your wives and children are in Europe now. We all work in Ukraine and we send them money from Ukraine. There are 5 million persons there. And we, according to the statistical data of the National Bank, we send them up to $500 a month. So basically, that's a lot. But this level of transfers, according to the balance of payment, is accounted for as import of touristic services, because this is the money which is spent for hotels, for food. Last year it was $6 billion. Last year it was an outflow at the level of 20, and we and our colleagues, the analysts from the National Bank, we expect that these transfers will go down because more and more of our Ukrainians find jobs abroad, but that's still the outflow of $19 billion this year. So if we talk about this latest factor, basically from the first day of the war, the foreign transactions were prohibited. Part of the business which our company is part of, and I'm sure that most of your companies are part of that, are those who during the first month of the year, of the war paid 120% taxes to the budget more. We didn't have to do it, but we all were paying, all those who could. And we realized that the war is there, but we were transferring money to armed forces. But some of the companies have the policy of export of funds, and our population usually accumulates the cash and make their savings in cash. You know, that's the sign of our economy. The normal level was 5 billion. Last year was 11. And this year, the National Bank expects that it will be not less than $11 billion of outflow. But talking about the total balance of payments this year, and here I have good news that at the expense of those 40 billion which of foreign assistance that we received, they covered our minuses, and the total outflow of currency was just $2.4 billion. The forecast for this year is plus $2.7 billion, and this will be plus 11 billion So the national, through government attraction. So the National Bank has the reserves at practically the same pre-war level. Even this year, the situation with the exchange rate, the most disputable issue. I could talk about that for half an hour, but I have only 40 minutes so that you can ask questions. I already see 7 questions asked. So that is according to the methodology of the National Bank, that's a real effective exchange rate of the hryvnia according to the NBU methodology in 2011, 2022. I know that most of you don't believe that 36.6 is officially market exchange rate. Many believe that the market exchange rate is 40-42, but the spread of 15-20% is too big. But we know from the events of this year, we still are getting some funding from to the National Bank, and the National Bank has to buy these dollars. And if you pay attention to that, we will not look at it in detail, but that's the balance of payments for 2023, month by month. And you can see that most of the months are positive for the balance of payments. You see here it's June. That is for February, March is negative, but the balance is plus 3 billion. So our model shows that there is a big probability that the National Bank, 100% probability that the National Bank, without any harm for its reserves, will maintain the exchange rate for the first half a year, the level at which it is now. Maybe between the second and third quarter, it will be reviewed in order to stimulate export. Those who are exporters to Europe, I believe that you understand that not everything is good with competitive advantage in our country. So maximum, according to the indicators of all the lines of the balance of payments, well, basically you will see the complete table in the presentation, but the maximum level of the valuation is 41.8 hryvnias per dollar. But we preserve the mathematical probability that the exchange rate will be less than 40. I know that most of you are not operators of the money from the budget, so I will tell you briefly about the situation with the budget. That's our truth. We are between 65 and 60, 55 and 60% of the share of the state in the economy. You see here that the negative side of that is obvious for everyone, but there is also another factor which helps Ukrainian economy to stay as strong as it is. Despite all the negative factors, the state today is the ordering the commodities and services which the consumers of private sector do not buy. And if you look at the blue zone, this is quite a good rate of restoring the private sector. The consumer market could feel the so-called wartime factor. I will give you the data that were announced. We have more than 1 billion army, out of which 250,000 are at the front line. And that means that an average 60,000 grivnas are the salaries of those who serve in the army, and those who are at the front line, they receive 100,000 grivnas a month. And the banking sector, and after the war, this will be the real estate, which will feel the pressure of this money. We call them the new upper middle class. In Ukraine, we have never had 250,000 of men who receive stable salaries of 3,000 euros a month officially. We have never had such a powerful cluster before. That's one of the factors of war, which is both negative and positive, like many things in macroeconomics, but that's the factor which doesn't allow the GDP to go down. And we have to finish this year with the 170 billion economy in US dollars, but later the story will be sad, because as you can see, the revenues go down, almost 4 trillion of all state expenditures, more than 3 are the payments for previous debts. All the expenditures of the state are 1.3. Could you imagine how much we could lower taxes if not the war? Additional 1.2 billion. And we were discussing today, they published that Ukraine received more than 100 billion as the assistance in kind, and the budget of 2023 does not differ much from the budget of 2022. But as we all know, and also look here, let's look not at the percentage. Here it shows in $1 billion. Every part of the economy. The state was collecting taxes before the war. The $74 billion in the most successful year. First year of war, these revenues fell by $11 billion. Next year, they will go down more by 10%, by 10 billion. So basically, your ability to pay taxes goes down with every year of war. And the fact that the consumer market doesn't fall in the same rate as the markets of Syria, Venezuela, Iraq, or Kuwait, that's wonderful, but we need to realize that the existing tax system, maybe some of you know, I am part of the working group which is developing a new liberal tax code. It's mostly known as 10-10-10, which has to stop this trend, because Ukrainian entrepreneurs and industrialists, they do what they can. We donated to the armed forces last year more than we could afford. We had a large conference. There were 10 captains of industry. and we had discussions, and we came to the opinion that first we were transferring money, then we started to calculate, and we gave more than we could. Now we want to see a step from the state, even though the conditions, it's a sin to say that the war has favorable conditions, but that's the year of restructurization. That's quite a good window of opportunities for tax reform. According to the old system, that's draft budget, and that's our forecast. If we do it 10-10-10, the state will get physically more taxes, and it will be by $11 billion that it will lose in other case. Now there's a discussion going on that maybe we'll make this reform after the war, but if there's a shortage of $2-3-5 billion, it's easier during the war to ask for that from our foreign partners than take it from us, because it's impossible to get anything from us now. And that's one of the arguments. Another factor, and that's the state debt, public debt. That is our standard chart. All the alumni of MIM know that. Gray zone is in $1 billion, the foreign debt of Ukraine. And the columns are the percentage of GDP. As you all remember from the course of macroeconomy, and there is a more strict criteria that the safe level of debt is not higher than 60% of GDP. If we take our wartime period, starting from 2014, it shows by the end of every year. But in 2014, there was the situation when it was higher than 100% of GDP, and thanks to structurization of Natalia Yereska, I didn't like everything she was talking about, but there are, we can say that she did a lot for the state. That the Ukrainian GDP was going up, and the share of the debt was going down. It became less than European 50-60%. First year of the war, our debt went up only up to 80. And this will be the end point, because half of those $40 billion that we receive every year, we receive them not as credits, but as grants and direct assistance. And one more thing I would like to emphasize. These are the main figures of the forecast. If you want to see where the economy of the country is, this year, we cannot but say that this year that Ukraine passed the first year of war the best way it was possible. All the forecast that will get up to the level of 170 billion by the end of this year is moderate pessimistic forecast. And the colleagues from the National Bank, from the Ministry of Economy, we all believe that the war will finish in summer this year. I believe it sincerely, but according to the laws of our science, we publish moderately pessimistic forecasts. So it cannot be worse than what you see on this slide. There will be questions, I'm sure, and what will happen after the war? After the war, I have only good news for you. I took several charts of the countries that survived the war during the last 30 years. You recognize these countries. You all remember that in Cyprus, they still have their DPR, and that's the Northern Cyprus, and how powerful, what a powerful country attacked them. And they were saying that they will never grow. You all remember, maybe you don't, but after the Arabian Spring, Egypt survived for 2 years the civil wars, and you see how GDP was resuming after the war. That's after the um, war in the Middle East. In consultations with our American colleagues from the first weeks of war, I know that other groups from other universities are working, but we are updating this calculation. That's calculation of losses. When we are talking about economy via prism of dollar GDP, we all, me as well, and you, we all lost as citizens, as owners of our companies in revenues. And some people have the plants that were physically ruined. And all these losses, that's not just the cost of how much it costs to build some new plant. That is the EBITDA for this period and the reconstruction. And in macroeconomics, it's always in dollar GDP, how it should be if we didn't have the war. That's the forecast, the consensus forecast of IMF, Goldman Sachs, and so on. And for 2030, we had to grow up twice that because there was a global super cycle of growth forecast as we saw it before the war, and our war became the factor, not just the inflation in the United States, but the whole energy crisis in Europe was a bigger trigger than these 2-3% of the inflation. And we went down to our 158, and not to mention the billions of assistance. But if we grow at the rate as Ukrainian economy was getting restored after the crisis, but we survived the 3 economic cycles, and this is the rate of our restoration after the crisis. If we take the average, that's more complicated formula, and this regression is more moderate, but it shows that we will get restored till the pre-war level. We will catch up our rates of growth, because our pre-war level we'll see in the end of 2023. And if the war finishes earlier, then faster. And that shows that we lost more than $500 billion of our revenues, and some country of the world has to compensate it. But look at these figures, and these are also moderately pessimistic. That's our dollar GDP and the rate of its growth after the war, and that is what average salary you will have to pay to your employees with this rate of the growth of economy. In 2030, Ukraine will be ahead, will have the salary of 1,150 euros a month, and it will be more than in most countries of the Eastern Europe. Here, we did not include those 200 billion assistance. And you know that in Lugano, they promised us this money. They promised $200 billion, which will get to the country during the first 3 after-war years. So just imagine you get $60-70 billion a year, and that's the level of direct foreign investments of Germany or China. And it's difficult to imagine the rate of growth for labor, for construction materials, for infrastructure. You remember we had this large construction, but almost all the roads of the country were restored, and that was $5 billion a year. And it will be 60-70 billion a year. I believe they will not know what to do with this money. And for you, for all of us, this will be in macroeconomic, there is such a term, and my favorite one is tennis ball jump, because very often the economic curve reminds that. And I believe that the average salary, which will be at the level of the salaries of the countries of Eastern Europe after our victory, we will catch up with these countries within a year or year and a half. You will have to pay to your construction people more than 1,000 euros a month. Otherwise, you will not be able to hire people. This will be a fantastic jump. We just need to stay to survive this year, believing in our General Budanov and our heroes. And we have to stay strong. And then, I'm sorry, but next 10 years will be the happiest 10 years in your business life, because nowhere on the planet you will find the economy which will be growing in higher rates, capitalization of your companies, and so on. Though we'll be paying by paying very high salaries to our employees, and they will give it back at the consumer market. Well, now I know that Vyacheslav, you were following the time. I will not be able to read all these 29 questions. Just give me 2 most interesting ones. Dear colleagues, I read them, but I will not select the most important, the less important ones. We don't have much time left. Whether from the point of view of macroeconomy. But the main question is, and there was a question on how will demography impact the GDP, but I would say how will Ukrainian economy, after war economy, impact the demography, will impact people. The salaries will go up, but will we have enough people? From the beginning of war, almost 11 million Ukrainians, mostly women, left our country. Out of them, 5 are back. According to the assessment of Eurostat and the data of the UN, because they take into account some migration to Russia, but we know that is a forced migration, but we'll take the Eurostat figures. It's 5.5 million people who are abroad now. There is a survey, and you can read it at Eurostat and the Central Bank of Poland, which every quarter organizes the survey. Out of 84 to 90% of our people, it's 9/10, 9 out of 10 when answering the question whether they will go return back to Ukraine after the war is over, they answer yes. I don't know how it will be late in future, but today only 10-15% of our forced migrants will stay in the European market. Some have children, schools, universities, but those who are back, they will not be sorry. And it will mean that this will be just that will mean that there will be more consumers of goods and services. So there will be so many positive things, and the forecasts are very positive on return of our citizens. There's a question which is very important during the war. Russian economy, according to their statistics, hasn't decreased. What do you believe is happening in Russia? I had an hour of discussion at the Radio of Liberty. Briefly, all the forecasts, Western and ours, they no one expected that despite the 9 waves of sanctions, it will get a positive balance of payments, which was $220 billion, like it was last year, despite the fact that 1,000 brands left them. And despite all the sanctions, the transactions were also decreased because millions of people are without MasterCards and Visa cards. But despite that, Russian economy, because of quite a qualified, and that was the move against the market of the Central Bank of Russia. That's the only body that worked well. They strengthened the exchange rate of ruble. They killed the profitability of all their export, but they artificially accumulated the positive balance of payments. This money was spent for war. And because the supplies of oil and gas were reduced, the prices in Europe went up. Now, Gazprom will never get 100 billion in the market because that is replaced by LNG supplies from the US, Norway, and the Gulf countries, and that's forever. Now the oil sanctions are implemented, but January, February shows that this year will not be that good. Russia will have 6-7 trillion rubles, up to 10 trillion rubles, the budget deficit. The gas revenues fell by 30%. So basically this, it was like the system of artificial support of breathing, which was switched on last year. What the exchange rate of ruble, which was 80, and they strengthened it up to 50. It's like it's 40% revaluation, it's 40% tax for exporters. Ukrainian exporters survived that, but not at a such scale. Before the exchange rate was adjusted to 36.6. That is an awful thing for business and financial sanctions. I mentioned it many times, and we cannot hide it forever. Russian banks do not have currency hours to return currency deposits, and that's more than $120 billion. The banks do not have this money. they don't have, we know the Nostra accounts. If you would ask me a question, what is Nostra accounts, I wouldn't answer. The correspondence accounts in the Western world of Russian banks, they don't have as much money. If anyone listens to us from Russia, take your money from the banks. That's a good advice. I don't think they joined us. I will try the structure of economy. Let's go look back at Ukraine. The crisis changes something in structural economy. And it's clear that Ukraine was supported by the resources which were built before, because the economy cannot survive without investments, and investments are long thing. How the economy of Ukraine will change structurally, not immediately after restoration, but when the restoration happens, what will be the main structural changes that you can foresee? It's easy to foresee because it's like our economy fell after 2014, 2015. But since Minsk agreements, the economy started to go up. Ukraine has become a small China for European Union because salaries fell 3 times in dollars. The qualification of labor is still very good. Not everyone left abroad, and it's profitable to produce everything here. And you know, more than 400 enterprises that were open in Western Ukraine, and that was the industrial outsourcing for a European Union. After COVID, it's very important. And if Ukraine gets, after the victory, gets the guarantees of security, and these will not be just the NATO countries, I don't know whether Russia will be denuclearized or denazified, and will get some guarantees of security, which will make it possible to continue the trend of industrial outsourcing from Ukraine. And our export will not stop growing. 50 IT specialists from Ukraine left Ukraine, but the export revenues from IT is still at the level of 7 billion. It did not decrease. And despite all the problems of our business climate, we know about all our problems. Ukraine before war had the level of agriculture, which was 14%, industry more than 20. Our economy was 70% service economy. That's the structure of modern economy. The US has the same structure, and most of the countries of European Union will be developing more in the direction of servicing economy. And taking into account that our population is quite knowledgeable, and also taking into account all the investments that will come to us after the war is over, this will be the main direction of development. And that's not just the opinion of Kukhar, but many people believe that the IT sphere and also the agricultural processing and the military sector, we are producing drones and everything that flies and shoots, and after war we'll be exporting it. Some of the advanced technologies were tested in the warfare. And the last question. I will not ask my question, but I will ask one, because there was a series of questions related to GDP. But you mentioned that you are the member of the group on tax reform. What are the main concepts suggested? What are the main things suggested in tax reform? And what is the probability of implementing that during the nearest after wartime? That's a very good question. I'm a bad political scientist. I will not give you any political forecast. I will not say how probable it is that the anti-corruption code is adopted, because we know that the activity of our head of the tax committee, he was calling it tax reform, but our colleagues were calling it tax anti-reform. And the the tax field has plenty of mines. It was done before the war, and we have to demine it and change it. Probably we need to pass a new liberal code, 10-10-10. That is the experience of Bulgaria. And in 2 weeks in Kiev, there will be a big conference. Artur Lafer will arrive. You remember during the lectures, I was showing you a Lafer curve. He's alive and he's 80 plus, and he will be in Kiev, and he will deliver a lecture about how to do it best way. There will be presenters from Bulgaria, from Ireland, and these are countries that reduce taxes, and they proved that the Lafar curve is working. I don't know what our political chances are. As macroeconomist, I can calculate the figures and show them to everyone in the government and in the parliament, and that's what I am doing. If we want to lose $10 billion a year in taxes, let's preserve all the tax rates. If we want to get this money back to the economy, and if we want business to breathe full breath, then let's pass a new code. Okay. We will believe that everything positive will happen, and everything bad will not happen to us, but will happen to our enemies. But whatever happens, even if there's no tax reform, this economy will grow after the victory. And 10 years after, keep your head, because our yacht, our cutter will be going ahead fast. You will come to Kiev in 10 years and it will be like Dubai. There will be business centers constructed, and all the restaurants will be full. I have a suggestion to ask our students to paint this beautiful picture. I don't know whether we need or need not to developed the Trukhanif Island. I warned you that this is quite an unusual event at Reinforce UA, and that's why we violate our time frame. I thank Mykhailo for saying later. Thank you for very interesting presentation, lecture. Thank you for this, for sharing the data, and please give us this presentation, and my colleagues will put it on our website. There was a question why we do not support the women who are in Ukraine, but the money will be used for temporary displaced people, Ukrainian women who are IDPs, who had to change the place of their work, of their life. Okay, let the audience go and congratulate their beloved ones. The Reinforce UA project continues, and next Wednesday on the 15th of March at 6 o'clock, we'll have a guest, Karen Smory, who is quite a popular author of books, a person who consulted large companies. He works with Massachusetts Technological University, and he'll be talking about leaders thinking. We will go back to this topic, and this will be about 3D leaders. And I believe this will be an interesting discussion. And those who can, on the 15th of March at 6 p.m., please join us. And again, I would like to thank Mykhailo Kukhar, all our participants. I'm sorry that we failed to answer all the questions, and I wish you good evening. We will win. Glory to Ukraine. Goodbye.
The war in Ukraine has changed the world. And now we need to think about where this world is moving to, together. That's why MIM Business School is launching the nationwide educational project Reinforce UA, where the world's greatest minds will share their ideas and insights. And you will get their experience, change your perspective, and discover what changes should the business be ready for, before and after the victory. Every week on reinforceua.com.